Hello and welcome to the paid weekly recap for the week ending February 27th, 2026. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the paid system. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas, so please keep that in mind as you evaluate any of these ideas that we discuss. I also urge you to read the characteristics and risks of standardized options available at the highlighted link here, and if you need more time with the disclosures, please go ahead and pause the video now. Otherwise, we'll get into the recap for this past week. Now, the biggest news I think we've got for the uh, interest rate structure is really that we saw this fall in the 10-year yield, and it's been coming for a couple of weeks now. And then we breached support on Friday with a high CPI data and concerns over economic growth. Now, this is potentially a problem for the market. If we've got high inflation and weak economic growth, then that stagflation word starts to get in people's minds again, where we have low economic growth, but because of inflation, we cannot lower interest rates to spur economic growth. That could be a problem. We've also seen some weakness out of tech earnings. NVIDIA was weak on Thursday, and the broad market looked like it was ready to recover Tuesday, Wednesday. Thursday, we started to pull back after NVIDIA earnings. Friday, we fell further off of that CPI data, as well as concerns about the geopolitical risk between the US and Iran. And on that note, not factored into these charts yet is what happens after the strikes, the airstrikes that occurred over the weekend. We'll see on Monday. Certainly expect to see oil go higher, defense stocks likely to go higher. Will the broad market fall under concerns that this is going to escalate further, or is this going to be an expectation that somehow this is going to lead to great resolution, bullish for the stock market, bullish for the US economy? Time will tell. The charts will let us know in the morning. Tech, as noted, a bit weak on Thursday, started to get some rotation into tech when Tuesday, Wednesday, and looked like tech was going to start getting back some leadership, and some people were willing, investors were willing to take some risk after heavily investing in things like industrials more recently. But alas, that NVIDIA earnings didn't support a full continuation here. And the market just went back to the mode of maybe it wasn't quite time to start buying into tech after all. And so we remain below the 100 and 200, 150-day moving averages. We do remain above the 200-day moving average, above 590-ish level, 595. All in all, it's not too bad, but it could get worse if the geopolitical concerns take hold. Finally, we have small caps, generally looking better than the broad market, but we've had some weakness in financials. Friday, we had some strength in healthcare as people look towards safe havens. We've had strength in energy names due to higher oil prices. So it's a mixed bag for the small cap sectors. Healthcare, fine. Financials, weak. Energy, strong. All in all, again, small caps not subject to nearly the same liquidation right now or reduction of positioning as we've seen in tech, but it's also been an underperformer for years, if not decades. People have been heavily focused on tech, and if that rotation continues, that is still the sector that seems to need position reduction more than any. And then finally, we've got the VIX, and we got above 20 again on Friday, ended up closing slightly below. But overall, the VIX is towing that line of concern and fear versus return to normalcy. Again, I expect that with the airstrikes in Iran, we will see a VIX elevated on Monday. But then the market reaction will dictate how the VIX and the market move forward. If the VIX starts to fall off on Monday, that may be telling. If the VIX starts at 22 and continues higher throughout the day, then it tells me that fear has really taken control. Now, in this week, we only had one signal, and it was in Halliburton. So, looking at Halliburton, I've been a bit of a I've been skeptical of the energy rally. I thought some of these geopolitical risks would ease. But this week, it didn't seem like there was going to be much change on it. And frankly, there wasn't, other than Friday, when President Trump said that, you know, we wouldn't like to pursue airstrikes, but sometimes you have to if the negotiations are moving forward. So energy prices didn't fall. Halliburton prices did not fall either. The entry on the 24th till the exit on Friday, the stock was up about 1.8%. Not a bad return for the stock. The options, the 34.5, 33.5 put credit spread, could be entered at 22 cents on Tuesday and expired at nothing. So a 28% profit in a put credit spread versus a 1.8% gain in the stock. Now, if energy prices are going to be up on Monday, a long call position would have been a preferable trade into next week because of the weekend geopolitical situation. But the safer trade, and the one that worked here, was the put credit spread. Both may end up working fine. But for now, happy to see that put credit spread expired worthless. Take the profit, move on to the next trade, and look for the new opportunities on Monday morning. And we'll see if there's some good ones this week. We will be looking at some call entries this week. Given the market conditions, towing the line of support, struggling to breach support, but the chance that we have a tail risk scenario is elevated. And in those scenarios, less likely to be looking at put credit spreads unless the market technicals align for it in spite of the geopolitical news. So we'll look at some call entries early this week. Hopefully see some exciting opportunities. It could be even later in this week as we start to look also towards some shorter term signals based upon the AI that powers all of our trade ideas. The live trading room continues to perform well. And if you guys have time, I do urge you, join us. Morning bell from 9:15 till 10:15 or 10:30 Eastern, closing bell from 3 to 4. Happy to talk through anything that is on your mind. Go over trade setups that are going through paid or other AI generated signals that are helping generate this kind of profit as we go through earnings analysis and everything else. So please do join us. And if you can't join us, or if you can and you want to send us an email, I'm Keith at yellowtunnel.com. Vlad is Vlad at yellowtunnel.com. Always happy to address any questions, concern, feedback, etc. So happy to talk. If you have any questions, do not hesitate to reach out. Thanks again to everyone, and looking forward to a very dynamic week this week, thanks to some geopolitical news over the weekend.